course, people are going to tell you what you want to hear, but you have to get a sense of who they are at their core as an individual. Do they respect you? Do they like you? Do they trust you? And I think that's a two-way street. We always talk about it from an investor standpoint of, hey, if you're an investor, you want to do business with people you know, like, and trust. Well, I think the operators and the sponsors, they need to do it the same way, right? Do you trust this individual? Is this somebody who you want to be in business with over the next 5 years? I think that's a two-way street, and both parties should be asking themselves the same questions.
This is the real estate investing experience. We get it. Real estate can be rough sometimes, and that's why we bring in the experts to talk about the experiences you won't hear anywhere else with your hosts, John Cohen and Chris Grinzik.
What's going on, guys? Welcome back to another episode of the Real Estate Investing Experience. I'm your host, Chris Grinzik, and with me and beside me this week is John Cohen. John, good to have you back from Lake George.
Oh, thank you. It was nice. I wish I was still there.
I don't blame you. I'm a little upset I didn't get the invite.
I know this one was actually, it was nice. It was the first trip that we took with nobody. It was just my wife and my daughter. So my parents were up there for the weekend, and then we stayed 2 days after. And it was just us. And I said driving home, and the baby was being really good in the car.
There you go.
I was like, that was actually really fun. It was just like, it was just, there was nothing overwhelming. It was just us. So it was actually, it was a different style vacation for us. Normally we have, friends, family, a ton of people around, but this was, it was quieter and it was nice.
I feel like all your stories, trips, experiences with Lucy are always surprisingly positive, and I'm just waiting for the other shoe to drop that it's going to be, she was terrible. She wouldn't shut up. She wouldn't stop crying. I'm waiting because my mom tells a story about me all the time about how there's one time we were at Disney, I wanted something, and I just started crying in the middle, and they just left me in the middle of the road for like 3 minutes. So I'm waiting for that story eagerly. Yeah,
we're probably a couple hopefully it never happens, but I know it's going to happen. Our guest today can speak about it, I'm sure.
Definitely.
She turned 6 months yesterday.
Oh, there we go.
So we haven't had that bad one, and I have thick skin, so maybe my wife may say, my wife.
Yeah, we need to get her on and get the update. She can pop in for 2 minutes, give us the real update, and then
she may say something different, but so far so good.
Awesome. All right. Well, with that, I'm going to let our guest introduce himself, but pretty excited to have him on. I think he's going to provide some interesting insight. But with that, John, you want to give our listeners your introduction? Tell them about yourself.
Yeah, first of all, you absolutely will get that meltdown at some point. I'm telling you, John.
Man, speaking from experience.
I've got 2 boys, 5 and 3, and each of them have blessed me with meltdowns that I absolutely was thoroughly embarrassed about. The kind of meltdowns that I think about my father, and there's no way you could have pulled that crap on my dad, but new age parenting, you can't really take things into your hands the way you used to. But yeah, I look forward to that and seeing your response at that point.
We got the prequel to that. We have a place upstate, and it's in a little association, and there was a woman there with 3 kids. It was like an 11-year-old, a 7-year-old, and a 5-year-old. And her mother was there too, or her husband's mother, I don't know. And her husband's, or the grandmother was a guidance counselor for 25 years in Manhattan.
Mm-hmm.
Oh. So she was saying no, there's no such thing as a bad kid. And the wife's like, my 11-year-old is a bitch. she I was like, whoa.
Yeah.
And the mother was like, you got to let him cry it out. We didn't do it for our first girl, and we are having the biggest problem in the world. And she's not even on this trip because she couldn't even be with us. I was like, where is she? She's 11. But it was funny because, like you said, there are things that you would have never pulled with my parents as well.
Yeah.
And you watch it today, and you're like, wow, if I did that, my parents would fail. But, no, it's coming. I know it. It's we cherish the moments while they last, the way they are right now.
There you go.
No, it's great. It's great. So yeah, so with that, father of 2, but, ultimately a real estate investor as well. And my background's in marketing. So kind of before I dove into the real estate space, I was a marketer and started my career at an agency, and General Motors was one of my clients, and actually did well enough to the point where they actually wanted to hire me on directly. So they kind of hired me directly to work for them. And that was around 2007. So as you can imagine, 2007, 2008 came around, and the market kind of went south. So here I am working at General Motors, and I look up on CNN, and I see my boss's boss on television talking to the CNN, anchor about the state of the automotive industry and was GM going to go bankrupt and all these things. Now, granted, 3 hours earlier, I had the same conversation. Hey, how's the business? Are we okay? She said, hey, everything's fine. Keep your head down. Keep working. 3 hours later, I'm watching her on CNN, which I don't know if she knows, but that's national television. 3 hours later, I see her and she says, hey, it's bad if we don't sell 15 million vehicles as a whole, we're going bankrupt and it's just going to crash. And I'm like, you just told me everything was cool. So, I mean, at that moment, you just, you realize that no matter how big the company, you can't just completely and blindly throw your faith to an organization. Now, I was pretty lucky out of that. Obviously, we had some layoffs and things like that, but I was pretty lucky. Kind of thrived actually coming out of bankruptcy. But one thing that happened was as you continue to scale and do well in a large corporation, well, they kind of make plans for you. So I started to watch them take my associates. And at the time, I was the youngest advertising manager in the company, in the organization. And they took one of my counterparts and they shipped her to California. No, that's a great place to go. They took another one of my colleagues and shipped him to Minneapolis. And I started watching a little bit more intently, like, wait a minute, they're probably going to send me somewhere that I really don't want to go. They took that same boss I mentioned before, and they shipped her to Shanghai. So ultimately, at that, I was in Detroit. We're all headquarters in Detroit. And at that moment, I realized, listen, two things. One, I want to be in control of where I live. And then two, I want to be in control of my future. So I actually moved to Chicago. And at that moment, started investing in real estate with my personal portfolio. And going through that process, ultimately started learning about working with other people, raising capital, and then kind of ventured into the syndication space from there.
Nice. And in the syndication space, in your personal space, what is your portfolio consist of?
Yeah, so right now we have around 70 million. Actually, about in another week, it'll be 85 million. So around 85 million or so in our portfolio as general partners, where we have different roles. Some we lead everything ourselves, and the large bulk of it, we're general partners where we work with investors and help with marketing and other aspects of the business.
Okay, very cool. And do you still own any of your individual portfolio, or you sold that, redeployed it into the multifamily side?
We've sold the bulk of it. We still have a duplex in Chicago that's doing really well, but we've sold mostly everything else in our personal portfolio.
Okay, nice. And as you were getting started, I think it's interesting here. When did you kind of start moving into the multifamily syndication space? Around what time?
2016 or 17.
Okay, so not too long ago. What was it like, building up, the track record, the investor database, all the, the 20 different things we could list that goes into, moving into that, syndication world. How did you go about starting that process and moving through it?
Well, I didn't intend to become a syndicator, and I didn't intend to go down this pathway. My goal was, and just to give you some more context, we bought a 2-unit as our first investment. We house hacked that, right? So we lived in one unit, rented out the other. Very easy strategy, very easy to implement, right? So we actually created a lot of equity in that first deal. We went to buy the second property, we bought a 3-unit deal. Our agent said, listen, I think you have a lot of equity in that first deal. And we kind of brushed it off. And she's like, no, listen, I think you should, get it appraised. You can probably refi out of that, the PMI. So we did that, and we ended up creating over $100,000 worth of equity in that first deal. So we took that money, we bought an 8-unit property. We started flipping a couple properties and things like that. And ultimately what was happening is we were using all of our own money. So we would save, pretty much 6 figures worth of down payment ourselves, buy a property, wait a year and a half, save, buy another property. And this was just taking a long time, and ultimately realized that this was not a real long-term sustainable approach. And for us, the big thing that happened was we had our first child, right? So we were having our first child. We had bought the 3-unit property, and we felt like we could continue doing that a little bit longer. But we started to open ourselves up to different strategies. And as we went through that process, we bought the 8-unit building with the intent of having one experience with a commercial property and managing a property management company and just really checking the box before we really started to work with other investors. So we felt confident and we felt like we had done all the things in our possession to really make sure when we're approaching people, we were credible, we knew what we were doing, and we would have success with them. But even then, I still was a bit, concerned about losing someone else's money. And because of that, I felt that it was necessary to even go to another step. And we actually hired a coach. So
Mhm.
I hired a coach. And again, I still wasn't thinking syndication. It was simply if I find a 12 unit building or if whatever, it'd be great to be able to have someone in my corner that can help me navigate what that looks like. So that ended up working out very well for us. And you fast forward, the next deal we ended up doing was actually 192 units with
Wow.
another group out in Texas. And we had just forged a relationship with those guys. We were looking for our own deal. They were looking for a deal. And one of the big differences is with our personal portfolio, I really just needed, double digit returns and I was set. When you talk about working with investors, the amount of return you need for them, plus for it to make sense for you, that starts to grow exponentially, right? So you're either now looking at more risky asset classes or you're going to look at bigger deals because trying to buy an 8 unit building where there's enough, cash flow and equity to deliver 50 to 70% returns for an investor, plus still have it make sense for you, it just wasn't making sense, right? So ultimately, we had a hard time finding a deal until we started partnering up with other folks.
Nice. And as you started going through that, the partnership structure, how did you guys communicate roles? Who was going to do what? What type of communication did you have beforehand, or did you just kind of figure it out as it went and said, "Fuck it, we'll figure this thing out"?
Man, this is the first fuck it I've heard on the podcast. That's great. Man, most of them are very, but I got my button up on for y'all. And
No, you don't have to worry about that.
No, we've when we launch, you're gonna hear some shit.
No, it's good. So yeah, I think it's really important to understand what the partnership looks like, right?
Mhm.
So the first thing for me was I actually offered to partner up, and
Mhm.
normally I'm not that person. Normally I'll do it my way and I'll just keep working and grinding until we get it done. But ultimately, we had built a really strong rapport. I mean, this was somebody we met, probably 7 months prior. And when I launched my show, he was basically one of the top first people I reached out to. He was the second guest on my show, right? So it was someone that we had already built a relationship with and we knew. So from that standpoint, relationship wise, we felt pretty confident in who we were partnering with. And ultimately they were doing the lion's share of the work, to be transparent. I mean, they found the deal, they were going to put the name on it, they're going to do everything, but there was a gap in what they needed from a capital standpoint and maybe some of the marketing things and some of the
Mhm.
investor relations. And that was where we were, we had built those relationships. My background's in marketing, and we had at that point cultivated a database of investors that were looking to get into a deal. And I kind of felt pressure because I felt like the clock was ticking. And here it was, months later after I had these conversations, got these verbal commitments, and I still don't have a deal for these guys, right? So
Mhm.
at a certain point, you kind of need to take yourself out of it, even if it was just for me. But they were looking for the solution that I offered up to them. And if I wasn't going to present it, then somebody else needed to present it. Otherwise, they were still going to have the problems and the challenges, which is why they had agreed to invest with me in the first place, right? Whether that were tax savings or whether that was just diversifying their income streams or whatever. But those are the reasons people get into real estate, and they agreed to it, but I wasn't serving it up. So doing this partnership was kind of a win-win where we could bring our investors into a deal with partners that we had built a relationship with. We knew the kind of people they were, and it kind of allowed us to all benefit.
Now I was gonna say before that, because you touch on a very interesting part that people ask all the time, like, what do you do first, find the money or find the deal? And the
Yeah.
answer is you got to do it both.
Mhm.
I don't want to say the money is easier to find because it's not. It's just as hard, but you probably could come across someone that says, yeah, I'd love to invest quicker than you're going to find a deal you want to buy. So the hard part is keeping them, let's call it warm, because at some point, if I'm sure we probably have similar investors somewhere. It's not that big of a space, right? Friends, family, and personal connections, no doubt.
Mm-hmm.
But then you start going to conferences and networking events, and the same people, you start bumping into the same people.
For sure.
So the question I have is that, or the comment that you brought up that I think is super important is, how do you utilize your database and monetize it, not for your own benefit, for their benefit as well. But if you can't put the deal together, obviously there's a really good relationship with, whoever that group was and you. Now you had a relationship with them. What do you think you can do, or how would you advise people to not just dive into that partnership because you have $2 million sitting there that people want to invest? Now, if that partnership's still going well, great. But if it hasn't, what things did you see or could you have noticed that maybe would have addressed some issues? Or if there aren't issues, what are things that you guys addressed up front so there wouldn't be issues?
Yeah, so I mean, I think to give a little more context, this is like a partnership within a partnership, right? So the guy I partner with, he has a partner, and then we are coming in kind of, we're general partners, but those two are making the lion's share of the decisions, right? So even when me and kind of my main and I know both of them, but even when I was having a conversation with one, sometimes, especially early on, just like any partnership, right? When you're starting out, you're still filling each other out, you're still learning your working styles and things like that. And I would say the one thing you want to be crystal clear on is the expectation and how decisions are going to be made. For me, when I communicate something to my investors, I want that to be gold, right? I mean, if I said it, I want them to take it to the bank. And, there was an incident, again, not a major incident, but something that I was told that I have in writing that I communicated to my investors. Well, that changed at some point after that conversation, right? I didn't get an update, so I didn't know. And then ultimately, now I'm having to go back to my investors and telling them, hey, that thing that you asked me about is actually different. And now I got to explain why, and it's just an uncomfortable position to be in. I think that's any partnership, right?
Yep.
But communication is definitely important. And for me, because that's really the main conduit between the investors in this deal, because they know me, they don't know the operators, right? They know me, they know the relationship. And when part of that, the challenge there is that there's going to be an uneasiness because they don't know them. If it was just my deal, I wouldn't have half these issues because they know me. And at the end of the day, they've known me, they've known who I am, they know my character, and they're trusting me to vet these partners and operators, right? So when we take them to someone else's deal, that's the big thing you've got to make sure you understand. So I think that's one big thing is just making sure you're crystal clear on who the individuals are, how decisions are being made, the lines of communication, because it may seem, to not be a big deal, or maybe it's the right decision even at the end of the day, but running your real estate business and running investor relations, they're not the same. I tell people all the time, if you're great at multifamily or real estate investing, that does not mean you're going to be great at syndicating, because that's about investor relations and that's about feelings. And I mean, I've done deals where we've lost money and I've actually felt okay. Not great, obviously. No one likes to lose money, but I felt okay. And I've done deals where we've made money and I've felt like, I'll probably never work with that person again. And I think that those are the two things, that it's not just about the money. It's about the interpersonal connection and, the value. Do you value someone's time and their opinion? Or is it once you get the check, all right, I got your money. F you now. Like, I don't have to listen to you anymore. Your money's with me and you're just parked in this deal until I tell you you're not, right? So I think that there's things like that you kind of have to fill out. And of course, people are going to tell you what you want to hear, but you have to get a sense of who they are at their core as an individual. Do they respect you? Do they like you? Do they trust you? And I think that's a two-way street. We always talk about it from an investor standpoint of, hey, if you're an investor, you want to do business with people like, and trust. Well, I think the operators and the sponsors, they need to do it the same way, right? Do you trust this individual? Is this somebody who you want to be in business with over the next 5 years? I think that's a two-way street, and both parties should be asking themselves the same questions.
Yeah, for sure. And you've just magically touched on a very big hot button of John. So I'm sure he's going to have plenty to say about this. And that's why we were laughing, because we both knew it. As soon as you touched on it and you said that, I knew exactly where his mind was going, and I knew how excited he was to chime in.
It is. It's the last podcast we recorded was the first one that we did where I did not rip investors. because it just didn't come up.
Certain investors.
And normally I have to bring it up, and I like to because we have a blacklist, and it's people that invested with us, and I would never take another no. They could come in with $1 billion. I would say no. And I tell every other syndicator, don't take their money, don't take their money. And I am adamant about it, and I don't care if they listen, because you have to know who they are and where it's coming from and what it is. Because if you don't, like you said, we've done deals that have made very good money and people aren't happy. And you're like, okay, but really? And we've done deals where they didn't go according to plan and people have been thrilled because it's like, you know what? They're there. They're honest. They're telling me what's going on. I could not be more adamant and clear when I tell people, just because they're coming in with money, know everything you can about them, because John's right. I say it all the time. It's not just the people like, and trust. That's important. But you want to know who's going to go to battle for you and who's got your best interest in mind, because you want to feel good about the whole thing. And you're right. Real estate investing is not just, I bought a good deal and I know income and expenses and how to deal with it. It's also how to keep everyone in your stable and all your investors going down the same way. You talk to one investor and another investor, and they're totally different personalities. And this guy may like to just tell it as it is what it is. And this guy may need, the support, the backup, and the understanding why. You can't just take one approach of thanks for your money, good luck, see you later. But I think it's ultra important to know everything you can, neither socials and their kids' middle names, like that's ridiculous, but you want to make sure that the investment they're making is not overextending themselves, because if it is, it's going to come back to bite you in the ass. And at the same time, you want to understand what they're looking for out of the investment, because there are people that, maybe they want too much hand holding. And that's a person that I recommend go get a coach, learn, or invest in a deal, or, invest in a crowdfunding deal and see how that works, right? Because you want to understand what they've done in the past and how they're going to be as an investor. Because a bad investor, whether they have all the money in the world, is not someone you want, because they're going to take up so much of your time, and you have to give them the time. You just don't want it to be a waste of time.
Yeah, for sure. I think that's something we've realized in the last couple years, and something as a lot of our investors have definitely been more friends, family, close acquaintances. And it's only in the last year or two, we've kind of started branching out more into, meeting new people and opening up positions, in our investments. And we've been very careful to have 1, 2, 3, 5 conversations before we even get into, returns or money or how much you want to invest or showing them a deal. Because like you said, there's just been not so many times, but there's been several instances where people are just not happy for a variety of reasons. And it's probably something we could have picked up on, or been more likely to pick up on, if we had been way more brutally honest or very more transparent. Not that I don't think we weren't transparent and that, we haven't been, had that clarity, but I think, just more time is only going to prevent that in the future. And I think that's what, one of the driving reasons for, doing these podcast episodes, just to have really truthful, honest conversations. Because the person that hears this is going to go, okay, he's not going to just take my money, even if he doesn't like me. It's going to be a two-way street relationship. And I think the person that doesn't like what we're saying right now, I'm happy if they don't invest with us, because I don't want that person to invest with us. There's somebody out there that's probably right for them, and there's going to be a better relationship. But I think having those relationships, and the more we can do now, is just going to make those things easier in the future. So I think it's an unbelievable point that you brought it up.
Yeah, it's important.
Yeah, no, absolutely. Absolutely. I would say too that, and John, I'll ask this question back to you is, you talked about finding those red flags in those people and not wanting to do business with them. Looking back at that, what's the common theme, or what could you have either asked or identified to say, you know what, that's somebody I'm probably not going to work with?
So I think the easy one is asking them a question. And I do it now. Every investor that comes in our door, I don't say I need your bank statements for the last 6 months, but I want to understand who you are as an investor. Can you make $100,000 investment? And if the answer is yes, and you have liquidity, okay, great. If the answer is no, it's not like get out. It's okay. Maybe a $25,000 investment is the right starting place, because if some people overextend themselves right out of the box, And, the red flags for us were, it was not the 15 meetings for, these are just two in particular investors. It was I want bank account access. I want this. I want to send my money in 2 tranches. I want to send it directly to the title company. Which is fine. We have investors that send it day of closing right to title. That's not the problem. Problem is that, they're going through the bank account. It's one of several, right? It's like, okay, red flag 1. Then, after that, it was, wait a second, there's a $3.75 charge. What is that? I'm like, it was a screw, right? It was a box of screws. Well, how many screws did they use? I don't know. Okay, shame on me for not knowing. Maybe I'll take some of the blame, but they were going little things like that. Like we had to trash out a unit. And I did give them bank access because it was a $400,000 small all cash purchase, and they were about $240,000 of the money. So they were a large investor. I said, you know what? Bank account access, viewing access. How bad could it be, right? I mean, they're looking at the bank account every 15 minutes. Why are there no rents deposited today? I'm like, because the way it works is it goes into the operating account and it gets transferred over. They went to the full extent of, and they're going to know if they listen to this, and I don't care. I've already said this. They highlighted bank statements for the last 6 months on incoming deposits from our management company. They thought that was money going out of the bank account. So they're like, the manager owes us 30 grand. I'm like, guys, that's 30,000 of deposits. So the red flags were when they were asking a lot of questions. I probably should have understood their education. One of them is an engineer for Pepsi, and the other one, I don't remember. I don't really 100%. All I know is that he lives in a building that his parents built, a 3-family in Queens.
I think a couple of the things to kind of broad stroke is definitely a level of education and sophistication on how the process happens. I think having an understanding of the giving up of control is a big one. I think we're probably to a fault brutally honest about the lack of control. And, I think that's another one.
Yeah.
I think understanding the finances, making sure someone's not overextending, because a lot of people, I think, just look at the upside and they don't necessarily take as strong of a look as the downside. Nobody looks at a deal and thinks, can I put my money in and not lose it? They say, can I put my money in? How much I'm going to make? It's funny. I'm going to segue a little bit, but I was going back and forth with somebody on Bigger Pockets today, and he was talking about different loan options for a small, I think, commercial or multifamily. And he said there was a local bank that was going to give him 80% for prime and a quarter, which is like a 5.5% rate, or he could get 70% for 4.25. And he's like, but it's an extra 1.5 going in. So we're going back and forth, and I'm saying, well, you'll make back more. The 1.5 over 5 years, you'll make that extra cost up front. He's like, well, what about the 10% leverage? I was like, honestly, it sounds like you're over levered. You're going to go more leverage and a higher payment. I was like, what's your break even like? What is it? What's your coverage ratio? He's like, well, why does that matter? He's like, if I can lever it more and I can borrow money against it, isn't that a good thing? And I was like, yeah, what are you talking about? I was like, you could lever it up to 99%. Your return would be infinite. But if one thing goes wrong, you're going to lose everything. And you're going to owe the bank money on top of that. So I was like, but what about your downside? He's like, but what about it? He's like, if my income covers it, shouldn't I be fine? If the mortgage company will lend on it, knowing full well that 2008 was because mortgage companies just lent on anything. They didn't give a fuck what people were making or about refinancing, or I don't want to get into that, but I was like, fine. I gave up because it's an internet forum. And at the end of the day, I said what I had to say, but that's the perfect example of how people look at deals. They never look at what's the chances I lose everything. And I think that's something I personally have been very cognizant of making sure that people at least hear out of my mouth before they invest for the first time, hey, you could lose every single dollar you put into this investment, even if we think it's the best investment in the world. And I think that's a big problem with, I'll call them the mom and pop or the retail investors. They just look at the dollar returns. The amount of times I go through a book with somebody and there's 40 pages of information on the property and the plan and the capital
Right to the
schedule.
back
And it's like,
page.
yeah, but what are the returns? And it's like, what the fuck does that matter? You didn't even look at what cap rate am I selling it at? How much are we increasing income and expenses? And, you know, what am I, like, it's mind boggling. People don't take the time to really research and look at these things. And I think the more you can, taking back into that education part, is start putting some of that stuff in people's head and get them to be on the same page as you. I think that's going to take away a lot of the hurdles in the future.
Exactly. I think that's the biggest red flag. You just want to know who they are and where they coming from, because people don't look at the downside. They don't. I mean, we have one investor. He's a great investor. He's amazing. Mm-hmm. But, you know, the return hurdle started as like, oh, high teens. Now it's like, I'm getting 40s. I'm like, I know that. But do you want me to put a 40 on paper? I'll just change the vacancy 2 points and drop the cap rate by a point, and boom, a 40, right? Like right. It's amazing. So I just think understanding who your investors are is just as important as understanding who your sponsors are, because, you know, we do heavy lifting deals. There is a ton of risk associated with our deals, vacant deals, you know, violations, law, you know, there's a ton of negative. We got to overcome all of that in a market environment that who knows where it is. So I make sure we touch on that a lot, and I gauge people's interest, right? Another red flag that I didn't notice is just overall body language and personality from every single meeting. Mm-hmm. You know, hindsight, it was like, okay, wow, that was a red flag. You know, he was a little like taken back, and, you know, little things like that. I think there's a huge that not people don't weight high enough. So I think all of those are huge red flags that is very important to us today, because we have institutional family office money. We also have mom and pop. We've gone up the ladder, and now we're going back down the ladder, because I think that where we are in the market, we want to make sure we have the right investors for the deal, because that's more important than anything.
Yeah, for sure.
I was going to say, from your standpoint, the partnerships, it's an interesting topic, because we get proposed all the time, and we're not negative on partnerships. We've done them. We love them. There's JV opportunities all over the place.
For sure.
Is there a partnership structure that you've done that maybe you wish you did not, or you wish that you would have structured it differently before going into it?
Yeah, we have a small property, a 28 unit deal here, and we had one investor on the deal, and we decided to do it as kind of a JV since it's just one investor. And at the time we were in Chicago, and you know, the role was, hey, you're local, why don't you keep an eye on it? We'll be, we'll manage it, but I still need someone to physically go to the property and just kind of confirm the stuff that I'm hearing from the PM and whatnot. And I would say, you know, this ended up being, I won't say a heavy turn, but we came into this with the business plan. We had to pivot from that business plan. Essentially, we recognized up front that we had some residents who were troublemakers, you know, folks who were getting in trouble with the police and things like that. We had identified the 5 worst residents that we wanted to get out immediately. And they were going to slowly turn the residents over the course of the year. Well, came to find out that while only 5 had a whole bunch of criminal records and criminal activity, the other 20 or whatever had a whole host of other issues that we needed to address. Things from just cleanliness. I mean, just the amount of, you know, roaches and things like that people live with. I mean, it was just mind-boggling and shocking. I mean, these people would move out and just throw their stuff over the balcony, and I had the health inspector coming by and all this stuff. So anyway, what ended up happening is I was going to make more money on kind of the cash flow, since this is more of a cash flow deal. And what ended up happening is we ended up having to take the thing almost to the studs from a vacancy standpoint and really turn this thing. And then we didn't raise a whole lot of money for operation capital, because the bank was going to provide the loans. And we originally had planned on doing that, but the bank was pretty adamant that they wanted to provide the rehab costs. So the short is, you know, we ended up taking vacancy, or taking the occupancy kind of lower than anticipated. So we got into kind of a negative cash flow situation. We had to pump in a lot of our own capital to stabilize the asset. So I think from a partnership standpoint, what I probably would have done differently is I would have structured the deal where we kind of would get more value or more equity based on some of these challenges. And then, if we prove out, maybe there's a bonus or some kind of structure there, but we kind of did the straight, like, I think it's a 60-40 split. And then we get more of we basically get an asset management fee and some other fees in there. But I probably would have went back and done that deal structure just a little bit differently, where we were better compensated for the amount of risk that we were actually taking and kind of turning this asset around.
Yep. I think that's probably the number one thing that people with experience, whether they've invested passively, whether they've invested as the general partner, whether they've done their own single family flips with an investor. I think that comes down to it. Structure is everything. We have a deal right now that we're probably getting ready to sell. Our structure is, there's no upside left for us. There's a ton of upside in the deal, but the upside to us is not there. Because an extra 10 a door doesn't yield us a mind-blowing amount of money more as opposed to selling it now. That's a very flawed system, but it's a structure that going into it, maybe we could have pushed harder for one thing and not opposed to the other. So I think structuring deals is extremely important, especially in any type of partnership where you're the capital source behind a GP or you're just doing a deal with an investor one-off. I think that's important. I think there, sometimes it gets swept under the rug because there's a lot of people like us out there today that, 70-30 split over 8 or whatever it is. Right. And people just jam that structure home. Investors get hung up on it. And then we bring out a structure and they're like, that's not market. And I'm like, but that guy won't do this deal. That guy will also mess this deal up. So this is market for this deal, or don't invest with us. I think that's something that sponsors don't do a good job at, right? Telling people sort of, this is the way it is.
Oh, I mean, we heard it from the investor you were just talking about. Sponsors are now throwing out GP upside like it's, nobody's business, just to get people to invest, just to raise money. They're giving up so much chunks of their upside on a deal just to get the money raised. And that's how, he's, boosting his returns to these crazy levels now. I mean, that's just what people are having to do to raise money because the deals just aren't there or the equity's not there.
Let me ask another question. From a standpoint of deals that you do, that's, is there a limit? Like if I called you with a deal and said, hey, let's JV on the deal, us and you, or, just us. Mm-hmm. Do you care if there's 8 sponsors or, 5 GPs? Is that a problem? Because in that situation, if I split the apple 5 ways and however it's split, it's irrelevant. But if my portion gets split so many ways and the deal, the first person that knows there's a problem in the deal is the guy that's operating the deal. The investors are the last to know. Yep. So if I know there's an issue and I'm not going to make money or the money's not going to be there, how do you vet? Or it's like, well, we won't do it unless, we have to be a minimum percentage of the GP, or is it doesn't matter. I mean, it's, everyone has their own opinion.
Yeah, I mean, I think this is another area where we've grown, right? I think starting out, we weren't starting out saying, hey, we're going to be general partners. We were looking at it from our investor standpoint and looking at it saying, hey, we've got investors who are looking to get in deals. If our pipeline's not there, let's find some other avenues. So that was really the lens we came into it. Now, we've done a few different GP deals since then. But we actually still focus more on our own portfolio and looking for kind of our next deal in our own portfolio. So when we do partner with others, we definitely want them to have skin in the game and have an equitable portion of it. But I really don't care how much they split the GP portion. What I do care more about is understanding who they are as a person. Do they have the right team in place? And then what's the deal, right? I mean, on a value add deal, if it's stabilized, let's say it's 92% occupied, it's cash flowing nicely, but we come in, we invest $5,000 a unit, and we feel like we can push rents $150. For me, while there's always risk involved, on a deal like that, I feel like, if there's cash flow day one to deliver to investors, and it's more of a, hey, over on unit terms, we're going to paint and change the countertops and appliances. To me, that's a little bit of an easier thing to do, especially if you have a 200 unit and you've got basically professional folks who are going to implement this business plan. I'm more comfortable there because I feel that, even if you do mess that up, you still have a cash flow asset, right? So I feel like there's some downside protection based on that. Now, if this were a heavy lift deal, then I think my position would change where I would really want to understand, okay, if this is the partner we're dealing with, how many ways is he slicing this thing and how does it go? And I'll give you a personal example. I actually did a flip project, and because I never wanted to be a flipper, but I wanted the cash from a flip, we did a JV deal where I was the money, and I actually went to the bank, got the loan. It's my name on the loan, all that stuff. And I had a construction or a contractor. He was kind of the guy doing the work. Well, fast forward, the way the deal was structured, going back to what you said, John, that deal made sense. It was a 50-50 split. But in reality, it was 100% me for all the risk. And he only took 50% of the profit if the deal sold. Right. And in hindsight, I didn't think about the deal that way, but it was really 100% risk on me. And if he executed, if he did what he said he was going to do, we would split the profits 50-50. It's probably a little different way of thinking about it, but that's ultimately what ended up happening. Well, guess what? Deal didn't work out. Yep. And when he realized it wasn't working out, do you think he was showing up on a job site every day? Do you think he was doing everything he was supposed to do? No, this guy turned to a bottle and called me at 12 o'clock in the afternoon crying about somebody stealing some materials from him or something. I had no idea what he was even talking about. And ultimately, I ended up having to pick that project up and go hire another contractor and pay out my ass to get that deal finished, right? So those are the things that no one tells you about when you're doing deal structures and you're doing your projections and understanding it. But ultimately, I look, because of that, I learned, look, if you don't have equity in the game, if you don't have skin in the game, then I'm going to need to evaluate the deal and the partnership based on that, right? And I'm not saying I would never do a deal with someone who didn't have equity or skin in the game. That's not what that means at all. What I am saying is that you need to have an incentive to deliver. And it has to be more than just upside. There's got to be some downside risk. And, for some people, they don't care, right? Deal doesn't go well, they'll rebrand themselves and they'll come back next week with the new LLC. And those are people we're not going to work with, I mean, we're just not going to work with those kind of individuals. And we take our time to get to know people. We try to ask more questions and understand what are they really looking to accomplish. And again, for us, we always put our name out there. The company is Casmon Capital for a reason. I didn't name it something that was, just something different. I put my name on it. So I think that, for me, it's important to make sure these deals work and we protect our investors in any opportunity we have to do that. And ultimately, we just get smarter about what we do, right? I think that there's always a lot you can learn in the books, but not many people write about, bad JV deals. I mean, I don't hear people brag about the deals where they've lost a ton of money and, deals that didn't work out and partnerships where they got burned and things like that. We always talk about the rosy stuff, right? It's always fun to get people excited and tell you got a $70 million portfolio and I got all this other stuff. But, what people don't realize is that part of the reason I got to where we're at is, I stubbed my toe quite a few times and I've looked at the bank account and scratched my head. And, we've had to go through those things. I know, John, you've kind of had the same kind of stuff where, you get through it and there's a lot of people who don't really have that experience. They don't have the downside. And because of that, they don't even ask these questions. They don't even think about it. And, they just assume everything's going to go well. And I think that's an important thing for listeners to understand is that, listen, sometimes deals don't work and people don't work. But like I said, if you understand the person, I can live with a deal not working because of factors beyond our control or whatever. What I can't deal with is doing a partnership with a person I never should have invested with or partnered with in the first place.
Yep. So that's a page out of our playbook.
Yeah, go for it.
The exact same thing happened. My name, my loan, 100% at my capital, simultaneous. No skin in the game whatsoever. The only skin I had in the game is that his wife was our property manager. Now, I would never use that as, with her own admission, she told me not to do the deal. So shame on me. But that was my only, I had a daughter that was just being born. We had a mortgage that was not working out. And I said, hey, if you do not refinance this and get me out of this deal. By the way, I had to find him the lender to take me out because his lender couldn't even take him out, take me out. I had to do all the work on both sides of the transaction. It was a loss, no doubt. He ended up buying the property from me. But the only reason I was able to do that is because his manager, I held back her management fee on our deal. I said, hey, you want to get paid? He's got to do this, or I'm going to take this money and go do it myself. So I got lucky with a very big loss. It was a nice loss, and I talk about it. And I also tell people all the time, because it was the page, that same story. the thing I tell people all the time is that, you got to learn from your losses, but you got to learn from your wins. And then simultaneous is that, it's not as rosy as it looks when it's going good, and it's not as bad as it looks when it's going bad, but you got to understand the losses and how you learn from them. Because anyone doing a deal, if they said they've never lost money, they haven't done enough deals, because not every deal goes A to Z.
Yeah. They're either lying or they haven't done it long enough.
Yeah, they're either lying or not. And, the first thing I tell people all the time is that, yes, we started this syndication model in 2013 or 2014, whatever it was, coming from being a broker. The story, and that's what we spoke about. Coming from being a commercial broker and then a residential broker before that and a financial advisor, I got my Series 7 when the market literally exploded in everyone's face. That's when I got licensed. It's like, okay, great. I just got my license and the market's crashing. I've never gone through a downturn. I put it out on almost all our podcasts. I tell almost every investor, I don't know. Now, I do have a partner who's, almost 60 years old. He's gone through a couple of them, very experienced
he's going to be upset if you call him almost 50, almost 60 instead of his actual age.
Okay. Over 55. I've used it as I have never done it. He has. But I tell people I've never gone through a downturn. So for all I know, I timed the market really well starting my business, 2013, 14. I've had 7 years or 6 years of just up. Mm-hmm. So we've made money on deals that if I bought that deal today, I would have made twice as much, because I wouldn't have made the mistakes I made. But I think that's super important. Just understanding that, understanding who the people are and that they have an idea. Okay, they've lost money. They've stubbed their toe a couple times. That's important. And I think
I would say too, to that point, looking at all the deals we've done, there's probably only one deal that I wouldn't have done in hindsight. There have been a couple deals that didn't work out, but they didn't work out for very other reasons, right? But as far as the deal and just the analysis and the upfront work, there's probably only one, and that was one. That was my first red flag on that deal, and it was the numbers were kind of tight to start. So I found out later that the guy's margins and the way he was running his business, there was no way this thing was going to work. He was basically his model was he was almost doing cookie cutter renovations, and he was buying 3 to 5, or he was doing 3 to 5 projects at a time. Well, he started to scale that to 5 to 7 and 7 to 9, but he was doing the same thing. So he was buying in bulk. So, but his prices, they were ridiculous. Just ridiculous, to the point where once everything kind of went down, I started really digging in deep and found out that they were taking a $5,000 to $10,000 loss on every deal. And I'm like, dude, your business model was just flawed. Like, you were just stupid from the jump. And I'm looking at the finished products and talking to the other investors, and they're all saying, no, it was great. I made 30K. I made whatever. And found out this guy was just taking a loss up front. I think his plan was to make it on the back end somehow, but obviously it was a house of cards that he wasn't able to sustain. But
yep, not unsimilar. He just does really good work for cheap, but he's a one-man show, and he just didn't have, it was like, I need to speak to the architect. I don't want to give you the phone number. Let me talk to the architect. I'm like, what the fuck do you mean you don't want? It's my name on the loan. The loan's coming due. I want the fucking architect's number.
Right.
But no, you're right. It's some people are talented and some people are stupid. And then there's, hindsight, we got blinded by, wow, this upside's, even if I said it before we did the deal, I warned, there was 3 of us that did the deal together but my name on the loan. I said, hey guys, he says it's going to get done in 4 months. It's going to get done in 8 months, but he'll get it done. And even if he's off, and instead of making an X profit, we'll make half of X, but half of X was phenomenal.
Still great.
Yeah, even at the 12-month mark, with basically no work still being done, we were still having conversations, because it was still clear as day what the profit was, and it was still going to be great. But it was like, all right, 12 months, all right. It show's over. It was like, but it was a real conversation. Luckily, we definitely made the right decision, but it was still a conversation.
Yeah, the house still isn't done. By the way, I know for a fact the house is still not done. 2 years. 2 years. Wow. And this just happened recently. This is not like this happened 7 years ago and it's like, dumb deal. This was 2 years ago, which is, goes against everything I believe in. I was told by a lot of people not to do it. But
Yeah.
I'm still living.
That was us getting blinded by the upside.
Exactly. No, we got
taking our own advice.
There you go. Not taking our own advice. We looked at the upside and did not calculate what the downside was.
Yeah.
But no, I think I love the honesty from you. I mean, you're not, and we have not had a guest yet that just sits up there and spits out, oh, this is a great deal. This was a great deal. Everything's good, because nobody wants to hear that. Like you said, there's not books out there that, give you the playbook for failure, right? It's like, don't do this, don't do this, don't do this. People just talk about like up, rosy, rosy, rosy. But, there are people that are doing this at 70 plus $85 million portfolio. But it hasn't been A to Z, maybe how you scripted it, but you're there. And I think that's the part that everyone has to realize, that you're going to make some mistakes. Everyone will, but you could get to the finish line. You just have to be strict about who you invest with, what you invest with, and where you're investing, more or less.
Yeah, I would say too, like it's it's funny. I was actually emailing an investor earlier today. We're getting ready to launch a very small coaching program, and he asked me a bunch of questions about, well, how much money have you raised and all these different things. And I'm like, you got to understand two things. That's not really our business model. Like, we've done that because it made sense to do that, and when it makes sense, we'll do it. But I'm not caught up in, I've raised X amount of millions, or even we got an $85 million portfolio. The bulk of that is split between a bunch of partners, right? I mean, when you're raising money for these large deals, it's not like I got $85 million. So it sounds great, but the reality is that, what it does is it just demonstrates we're obviously operating in larger asset classes, right? We're just doing bigger deals. That's really what that means. But ultimately, too, I think it comes down to your goals and the partnerships that you want to do. And it's relatively easy to go out and build a large portfolio, do a bunch of deals, and have those numbers jump off the paper. But I also think it takes some discipline to not do every single deal that comes across your desk, and to not raise money for everything. I mean, I've had 3 emails in the last 24 hours with different deals. Hey, do you want to raise money for this deal? No. Like, I don't like, that's not really what our primary model. Again, we will do it if it makes sense, but unless I'm initiating it making sense, it doesn't make sense, if that makes sense, right?
I love that.
So if I'm not reaching out saying, hey, I'd love to partner, how can we do that? I'm probably not going to do it, right? Like, I'm just not. So a lot of people reach out, and I'm happy to help, but we're just not going to take our investors into a bunch of different people that we haven't had a chance to vet.
We're doing a deal. You want to invest?
See, John, you might be on the short list of actually, being on. You and I've talked about some similarities in markets and stuff like that. So, I mean, there's a handful of people who I would genuinely, look to partner with. But again, it's because I know who they are as people. Yep. And I've gotten to know them and the way they think, and we feel that we're like-minded, and we're both going to protect our investors. And once we cross that hurdle, then it's hey, if a deal comes up and it makes sense, let's explore it. Or if there's a way I can help, let's explore it. But it's not, hey, I got this deal, I need to raise $5 million. What can you bring? It's like, no, I'm not. You're not going to put me on the time clock, right? I'm not going to do the shot clock thing where we got to run and just get the money by any means necessary.
It's funny. So we have 3 cold callers in the office that just pound the phones all day. And one of the guys he's negotiating 2 deals with a broker because he has the deal listed. He's like, if you guys start your due diligence now and you can finish your due diligence before we agree to contract, then you can have the deal. So I literally told her, I said, if I ever get time pressure to do anything, the answer is no. Like, don't pressure me that I have to do it yesterday, because I'm not going to do that. You have to have a discipline to say no. I think that's more important, because there are a million sponsors out there right now. And, okay, maybe I'm more negative on this, on this little live. So maybe I'm more negative than I normally am, but there are a million people out there right now that have no idea what they're doing. They just picked up a book and they're partnering with 17 people buying a deal for $7 million more than it's probably worth. And I think more important today, if you have a capital source or you are the capital source, more important than ever, you have to be able to say no or understand the business model. I think what you said earlier was really important. Raising rent's $150, spending $5 a door. It's hard to mess that one up if you're buying it fair. It should, even if it doesn't return a 20, maybe it's a 12, right? That's still a great deal. as opposed to, a super heavy lifter that, maybe the guy has no experience. I think that's really important, and just having discipline.
Yeah.
Discipline is extremely important, just by saying, it's not going to work. We're out.
Yeah. Well, I think it's actually funny that we're talking about. I was just thinking about the deal John sent me earlier today. Got a text from a really good guy. He's actually going to be speaking at our next meetup in September. He's an agent and a flipper on Long Island. He's been trying to get into multifamily. He said, hey, if I ever found anything too big, would you partner? And we said, yes, obviously, pending deal structure, all that stuff. So he sends me a deal today. It's 175 units in Georgia. And just from the listing itself, I was like, this is never going to work. It was like $11.5 million with a 3% finder's fee, 10-day close, all cash, can't go with financing. And I was like, bud, look, it could be the best deal in the world. I was like, it's never going to get funded. I was like, nobody's buying this deal. 10-day close, all cash, no contingencies. This guy's a moron. I was like, honestly, the way it was typed up, it was like one of those bullshit Facebook wholesalers you see on there who probably does very well wholesaling single family and smaller properties, but is now trying to get up into, the bigger space. And it just doesn't work. Very rarely does somebody buy a deal in 10 days, if ever. The only time I've ever seen it was that deal in Indianapolis that sold in like 13 days.
Yeah, and that was a broker deal too.
That was mind-boggling. We were stunned. Crazy. And I was like, guy, I don't want to discourage you. I said, this is bullshit. I was like, is there a chance this could be a great deal? Yes. But I said, this guy bringing it to you probably has no idea what he's doing. It's just never going to work. So as great as it could be on paper, it was like, 40% return because you can take the NOI from 1.3 to 2.3 or something. I was like, look, get the info. We'll take a look at it. We'll spend some time and see what we can learn.
Yeah.
But I was like, it's never going to happen. They're time pressuring you.
I go the other way.
Stuff. And I was like,
this guy wanted $1.3 million for a 40-lot mobile home park. And he's like, but you got to run your due diligence. You have to start today, and you have to trying to sneak it around the broker's back. And I'm doing a deal with that broker somewhere else. I was like, fine. He wants me to close before he signs contracts. He wants $1.3 million. I'll buy it for $400,000. Right? You want a ridiculous proposal? Okay. I know I can close in 10 days for $400,000 because it's worth $1.2 million, right? I know that. So I'll close on that deal in Atlanta. Not at 11 million. I'll close at 4 million.
Yeah, exactly.
Right.
You can't get hurt, but discipline is important, and saying no is important.
No, for sure. And I think knowing, because he's newer, I think you start to pick up a lot of that stuff about where you need to spend your time and what, just the way stuff is presented. Yep. You learn very quickly what's worth your time, what's not worth your time. And I'm sure, John, for you, it's very similar. You've got a bunch of people coming to you, hey, can you raise some money? Just the way they're presenting it to you, I'm sure oftentimes it's very clear that, hey, this isn't even worth my time to look at because they wouldn't need me if it was what they're saying it is or something like that.
Yeah, I mean, that's it, right? It's two things. I think, one, you hit on it. They wouldn't need me if it was that. I think the other piece is, again, if we haven't built a relationship, if we haven't, damn near extensively talked about this, I don't know why you would call and reach out about that. And I'm not saying you shouldn't. Don't take that the wrong way. What I'm saying is, anybody we partner with, I want them to have the foresight to ask themselves, all right, if I get a deal that is beyond what I can do, who do I call? Have your list. Call them before you need them. Hey, I'm looking at such and such. If I get a deal that's bigger than me, I'm looking at some potential partners. I have your name on the list. Would you be interested in that?
Yep.
That's all you got to do. I'm not saying I wouldn't. I'm saying if you call when you have a deal and the gun's loaded to your head and the shot clock is going off, I can't help you.
Yeah,
if you call me and you want to build and we can have time to hash that out and what would a partnership look like and what would you do, what would I do, now I might be interested. So all I'm saying is that I think I want partners who are proactive in their thinking. And if you don't ask me that up front, or at least explore a conversation like that, then I'm concerned that you don't have the ability to foresee other issues that might come up in your business and with the property. So, I mean, that's the reason for flat no. It's not that I'm saying no just to be a dick. I'm saying no because you've demonstrated an inability to foresee your issues. I have a list of at least 100 syndicators and capital raisers that I can call. Now, have I asked every single one of them? No, but I know what they do, and I know they know who I am, and we've had these kind of conversations. So I have a list of people I would call immediately. I have my backup list, and then I would, as I was getting a deal, I would reach out to them and say, hey guys, I've got LOI. I'm in best and final on a deal, and it's a pretty big raise. I'm looking to identify a handful of folks. I'm not sure if I would need you, but if there's an opportunity, would you be interested? To me, that's how you structure that. You get it all lined up front, so when it's game time, when that clock starts ticking. Hey man, we talked about this. You mentioned you might have some interest. Boom, we got this deal. What can you bring? Same thing with your investors, right? So I think ultimately you've got to nurture all of that, and I want to partner with people who are thinking 2-3 steps ahead like that, versus the guy who got a deal, did everything to get the deal, and now turns around and says, all right, now what? That's not really something that's going to be comforting to me or my investors.
No, because the when you sign the paper, you're already late if you haven't. You got to start today for the deal 24 months from now. You got to start that relationship today for when you find the deal in 24 months. Because if you sign the paper, and this happens all the time at our monthly event, we get calls. Hey, I met you yesterday. I got a deal. It's $12 million. Do you want to partner? I'm like, no, not at all. No chance. No, fine. I'll partner. Send it to me, and I'm going to give you 1% of the deal, and I'm going to take over. But people don't ever take that to heart, because I think what you said was super important. And that's like the there's so many good things, but that was like the title of the podcast is I'm not saying no to be a dick. I'm saying no because you have no wherewithal to have called me 12 months earlier to find out what I'm looking for. Because then how are you going to foresee issues as they become? We're playing chess, not checkers. And you want your sponsor to have the wherewithal to be proactive, as opposed to, oh, fuck, I found the deal. John, give me money. John, give me money. Chris, give me money. Mr. Jones, give me money, right? No, it's just never going to work that way. So I think that is absolute. I loved it. It's just having the wherewithal to be proactive in the approach and starting today. I joke about it all the time. I say, capital raising starts 24 months ago. Because it's not, you find a deal today and you called and you met a guy at a bigger pocket event or a meetup. That guy's not giving you money. He may give you money, but more likely, no. He wants to watch it, you mature. Are you going to be around in 24 months from now? Because if you're not, I don't want to invest with you today. So they want to watch it happen. And then that's the cultivation of a list. And having your A list, your B list, and your C list is important. Just knowing that these are the guys that I've flown to see them. I've met them. I've met them at events. I spoke to them. I listened to their podcast, whatever it is. But that's the hard thing. And nobody likes doing stuff that's hard.
No. Think about it just from our Columbus deal. We sent an email blast and spoke to probably 250 people. And we've got 30, maybe 40 investors committed. And those are all people that have either already invested. I'd say probably 175 to 200 have already invested.
Yeah.
And the rest are people that have either signed up or said they would invest. So they're all people that have already done it. And there's so many of them that have said no. And that's a relationship that, we've cultivated all the way through. And now it's, at a point for various reasons, good, bad, and different. They're just saying no. So if you're going to blindly call,
there you go.
There we go. The internet again. But if I was just saying,
I just sent you a text.
Yeah. I was just saying that, for our Columbus deal, we had 250 previous or serious potential investors, and we have probably 30, 40 that have committed. It just takes time. It's the same thing, whether it's you're going to a GP to help you raise,
Absolutely.
Or you're going to 50 people to raise money, or you're going to an institutional investor. It's the same thing.
Yeah.
Each one has its own timeline and relationship you've got to cultivate before someone's just going to hand over money.
Yeah, cultivating your database is key. Just understanding it's not going to happen overnight. You're building a business. You're not selling something on Instagram. You don't have a product that you're selling. It's like inventory, right? I'm selling cell phones. That's not what you're doing. So you got to create the market. You got to create it.
Yeah. I think even the thing, but what you're saying is that stuff takes time too. People think that, put an ad up and it gets sold, but
no, but if I have a really good cell phone, You know, if I have a really good cell phone that's just light years above everything else, you know, I'm going to sell these for $300 a pop. I'm, you know, bang, bang, bang. You know, we're not selling cell phone. We're not selling products.
It's not $300.
No, it's way more. I'm saying we're not selling. You know, I'm bold. Like I'm not selling toupees, right? But it's a little different.
No, for sure.
I think too, going back to the red flags and what we talked about, on the flip side of that, I always get a little nervous when someone wants to invest and we haven't had a conversation about investing. So that's something else that always makes me a little nervous. And for whatever reason, people come into our email database, whatever, and you reach out, you try to have a conversation and nothing, you get a deal, you send out a deal, and they come back with a bunch of questions. And I'm like, we've never even had a chance to talk, dude. Like,
that
I
happens.
need to get to know you. And they never invest. They just ask you a million questions and they never invest.
Yep. That happens. Sometimes we'll get leads and I'm like, you know this person? No. And, you know, we'll set aside a day every month to like follow up and call and reach out. But it's amazing. You know, there are serial people out there that are just clicking on websites and it's like, you know,
they're just, but it's back to the education. They're just chasing returns on paper.
Exactly. They try to see a million sponsored deals to see who puts the 40 on paper, which is just mind blowing to me.
Yeah. I hear. All right. I think
no, it was great.
That's a great place to stop.
I agree.
John, tell everybody how they can get a hold of you. I know you got, you know, a podcast, your own website, stuff like that. Where can they hear more about you, learn more about you, get in touch with you?
Yeah, man. So you can listen to the podcast. It's called Target Market Insights. It's multifamily and marketing, giving you the tips, tools, and strategies to really grow in the multifamily space. We also have a free offer for your listeners. We have a free sample deal download available if you are looking to invest passively and want to get a sense of how deals are structured, or you want to put together your own deals and want to get a sense of how deals are structured. We have a free sample deal available. You go to casmoncapital.com/sample deal to check that out. And then I'm on Instagram. I'm on Facebook. But email is probably the easiest way to get in touch with me, john@casmoncapital.com.
Also, we'll put that in the show notes. I can say I know I speak highly of our guests for the simple fact that they wouldn't be our guests if I couldn't speak highly of them. John's got a good podcast. I listened to one of yours recently. I literally have it saved on my iTunes because the insight in there, and this is someone that's been doing it for 7 years. The insight on that podcast was phenomenal. I think it was the content that even someone that has done it is still listening to his stuff. I think he does a very good job. I know he does a very good job, and valued guest, great guy, good friend. And I recommend everyone listen to his podcast, check him out and see what he's doing.
Perfect. Awesome. Thanks for coming on, John.
Thank you, guys. Appreciate it. Take care. All right.
Later, brother.